Hello guys, it's me Juno once more. Um, this is gonna be a quick video that I wanted to make just to have it for the record because I've been getting a ton of questions lately when I'm doing streams. And I get asked about Edgeful, what reports do I actually use for my trading, and it all comes down to two reports that are the ones that um, I use the most. There are a ton of reports, a ton of variations, but I think those two, one I use it for London session and the other one I use it for New York session, are the ones that I use in my day to day the most. Then there's others where I can check eventually from time to time, where I have doubts about something, like for example the average volume on the first 15 minutes of was one session, so you can see whether if you we're gonna have like good conditions or not by checking the average volume. But that's something that I don't use every day. It's just when I have doubts, I like to check some reports and others. But in general terms, the two that I'm gonna talk about and you can guess, because are the ones that I made videos about here on YouTube, are the ones that I use the most. First one is gonna be the opening candle continuation report, and basically I use this one to form a bias, and I use it mainly during London session. And the way I have it here, um, s- with the settings, it's a standard sub report um, with NQ for the past 3 years. And then I have a custom session that I created where I just said from 2 a.m. to 6 a.m. So basically, the 4 hour candle that plays out during New York, London session, my bad. Um, and what I look for this, like what this report measures, is what I have it here on customize. You're gonna see that I have it set on 1 hour. That basically means that if the first hour closes in one direction, what are the chances that we continue in the same direction of the first hour of this 4 hour candle? So for the next three 1 hour candles, what's gonna be the direction, or the direction should be? And why do I use it this way? Because the first hour of this 4 hour candle, the 2 a.m. into the 6 a.m., is between, it's a 2 a.m. to 3 a.m. candle. What happens at 3 a.m.? Uh, London session opens. So that means that before or at London session open, I can have a quote unquote bias based on the statistics, um, where I can see if that candle closed as green or red, and determine the following 3 hours what's most likely the direction going to be. So we can see that if the first hour closes green, we have almost a 67% chance. You're going to see that says green day, but the day refers to the time frame that I said, that is between 2 a.m. and 6 a.m. So it means that we have almost a 67% chance that the three coming 1 hour candles, like the whole 4 hour candle, is going to be in the same direction the first one. And on the other side, if it's a red one, we have close to, yeah, 61%, my bad, um, of being this 4 hour candle, like closing this 4 hour candle as a red candle. Uh, so going back to the chart, that means basically that we have this candle, like let's say it's green. Let me just set it to green. It closes as green. This is 2 a.m. candle. We are watching the 4 hour candle form between 2 a.m. and 6 a.m. And these are gonna be the hourly candles. These are gonna be the um 1 hour candles inside the 4 hour candles. So basically here, 2 a.m. candle closes the screen, and then 3 a.m. opens. We have, here's the 3 a.m. What I like to see here inside this is some sort of manipulation or reaching out, um, like a high time frame POI at 3 a.m. and then look for my entry signature in this scenario to the upside to get into a long position and follow what like the name of the report says, follow a continuation higher. Let me get rid of this. This one closed. First our first hour closes green. We have a chance that the coming three candles are gonna be, let me change the color real quick, are gonna be green also, because the 4 hour has to close, quote unquote, has to close, or it has a higher chance of closing as as a green one. So that way I can take advantage of all of this price action here in my position that I find during the Open of London session. It's an easy report to understand. It just following the continuation from the first candle of the 4 hour candle. You can use it for different sessions. You can explore by yourself. If you want to use the 4 hour candle, if you're looking for a lower time frame, you can check just the first hour, like for the 1 hour of the London session, and check how the first 15-minute candle closes. Like you can do really wild combinations and see the statistics, and then frame your context based off of the continuation of the first candle of the time frame that you've set. Pretty straightforward, but I think it works really nice. Especially on the days where London session. That's why also I use it for London session, where we mostly like London session is one that it ranges when it happens, that it ranges so much, but when it expands to the upside or to the downside, it keeps expanding with like no pullbacks, like little pullbacks and everything, and like actual like signatures that it is going to go to the downside. So you want to look for continuations when London is expanding higher or lower. That's the reason behind what I use this one more into London rather than New York session. And then for the New York session, it's the classic IV initial balance. There's different sub reports. The one that I work with the most is the breakout and then the retracement after the breakout. But we're gonna see the breakout. I highly suggest you to play around with the reports, because it's just something super easy to do by using the platform, and the statistics are really easy to like understand and start looking for ideas that you can apply to your own trading, like the current trading that you are doing. I think that's the best way to like take advantage of Edgeful. But basically, what the what the here we go. That is going to be the initial balance, and then we have the midpoint that we're going to show up. So the initial balance is basically uh, the first hour of a session of the session. It's generally used on NQ. So this portion of here over here is going to be the first hour. And price is going to leave a high and a low on this first hour. Then what you want to do is check whenever the price breaks one side or another, and then check the statistics, because what this does actually is tell you how likely we are that we are going to break to the upside, for example, and how likeliest price to come back to the low of the initial balance. Just following what I just said for the New York session, 3 years and Q, and set to uh, the candle closure has to be a 5 minute. Sorry, so we need to see a closure on the 5 minute time frame above or below the initial balance, and then here we see that the chances of a single break, a double break, or a no break day. On a no break day, the chances are low that we don't break any of these highs or lows. So if are not breaking it and we are close to breaking it, and we have reasons to think that it might go to the low or to the high, there's some reports that can give you a hint or give you data on whether we are going to take the low or the high with a higher chance or not. But if we suspect that we're going to take the high and we are late on the session, and obviously we have a 6%, 7% chance that there's no break, it's most likely happen. Like a break is most likely to happen, basically. And then for the double breaks, it's a 13% um, that it that we have the break to the upside and to the downside. So what this is saying is, since we have a single break, whenever we close above or below, we have almost an 80% chance probabilities that price doesn't retrace back. So imagine that we get a confirmation here, 5M, confirmation in the 5M here, and then price starts retracing lower again inside to the initial balance. And let's say we have here in this displacement leg, like this leg here, we have a fair value gap. For example, I'm just plotting examples here, but that's how I use it really. We have a fair value gap here, and we see price around this area. Obviously, there's just still a lot of room to go down here, and we can also like sweep this low and still close above the initial balance. That's true. That's something that can happen. But I found that if we have true direction, the structure makes sense. We close above or below, like outside the initial balance, and we retrace back into inside, and we find a point of interest where it makes sense that price supports. What we want to look for is a continuation into the same direction of the initial balance, because the probabilities are against us if we're looking for a short into the other side of the initial balance, because that's most likely not going to happen. So here I would look for something on the lower time frame for me to actually get into a continuation from the initial balance like this. You have a video on both these topics in more depth. One talking about the continuations, and I think I have a couple of videos about the continuations on how I use it for different 4 hour candles, 1 hour candles, or like opening times, if I'm not wrong. And then different ways on how I use the initial balance. But this is like a brief idea on, because for me, like everything comes to finding what you really need in your trading, basically. For me, one of the things that I struggle the most with my model is continuations. Like it's just super hard for me to frame continuations with my model. It's usually reversals why I trade the most. So I use the Edgeful into my advantage to be able to find different reports that makes my job of finding continuation setups easier. Both reports are based on continuations. The opening candle continuation, as the name says, is just to identify the direction of a certain period of time and going with the direction of that, of like the statistics. And in the initial balance, the way that I use it is just basically the same. Like when I have the probabilities on my side and I see something that makes sense on the structure of price, then I look for continuations. Otherwise, I would probably not be able to take continuations as much as I do now if I were not like if I was not using um Edgeful. That's it. That's why I also encourage to just play around with Edgeful, try different reports, find your struggles with the trading that you're doing right now, and find some useful reports backed by statistics that can help you identify your entry signatures in a different way that you wouldn't be able to do it without the statistics. That's the thing. If you're interested, like in any report that we can go over, or that's something that you struggle with your trading that I can check for you and see how you can improve it by using Edgeful. And also encourage you to try it by yourself. But again, I'm trying to help you guys out here and trying to explain easy things to make a little change in your trading if I can. Just leave it on the comments, and I think I can go over your questions, your concerns, your ideas, and bring it into future videos. Basically, I hope you liked it. See you on the next one because I'm gonna be making more videos. Again, this was a quick video, but I think a useful one because I've been getting this question a lot lately doing streams. And yeah, see you on the next one.